Prime Video's ad-supported pay structure strategy, first launched back in January, is having a major impact on competitors' negotiations. Amazon driving down the price of ads across all streamers and networks. For more, we want to bring in our very own Alexandra Canal. And Ali, what is I guess some of the trends that we're seeing within the ad space because of Amazon's offering?
Well, there's a few things at play here. One is the fact that we have those newer entrants in the ad-supported space. So think Netflix, Disney Plus. Remember, they only launched their ad-supported tiers less than 2 years ago. So already we're seeing this connected TV advertising landscape automatically starting to expand. And then in January, like you mentioned, we had Amazon roll out its Prime advertising on its Prime Video service as the default option. So you were automatically enrolled in those ads. And at the time, MoffettNathanson described it as, quote, a 500-pound gorilla enters the arena. And now 6 months later, we're starting to see that disruption begin to play out here. Analyst Michael Nathanson, he previously estimated that Prime Video could add over 50 billion impressions to the CTV market in 2024. And that amount is not only going to dwarf some of those smaller players, it's also going to increase inventory across the board. And as a result, that drives down prices. And we're already seeing that play out with companies like Netflix. The Wall Street Journal did report that Netflix is asking some brands to pay about $29 to $35 to reach 1,000 viewers. And that's a pretty sizable decrease from the $39 to $45 it charged last summer to some advertisers. And one of the reasons there is because Amazon is charging a similar amount. But we're seeing this increased scalability across the board. Yahoo Finance did have a chance to speak with Disney about this, their global president of advertising, Rita Ferro, at Cannes. She spoke a little bit about this big tech disruption, so I want to hear a bit more of what she has to say there.
There's no question it's created an excess of supply in the marketplace that for a marketer, you have to figure out, where am I going to spend my dollars? What's the right partner to do that with? And I think that's where the combination of creativity and technology really meets to really deliver on the outcomes. Disney competes with Amazon, Google, and everybody else. And so, to me, the big share is still YouTube, right? Like you just have to look at their earnings every quarter. I think we have done an extraordinary job because we have scale and we have premium storytelling and brands that everyone recognizes.
So YouTube, Amazon, a lot of those big tech names that we talk about, it's impacting some of those more traditional players there. Now, Nathanson is forecasting that total advertising streaming will grow 33% this year. That's a reacceleration from the 17% growth that we saw last year. So a lot of momentum building. But the platforms that are going to fall behind are the ones that have the most inventory, least must-have content, and worst targeting capabilities. Those are the companies that are most at risk. When you think of a tech giant like Amazon, they have a great ability to target those consumers, so that's very attractive to those advertisers.
And definitely attractive when you consider all of the content opportunities with the sports ball of it all coming up as well.
And just the ecosystem, right? Yeah. I mean, Amazon does a great job of keeping consumers in their ecosystem. I went to their upfronts. It was very impressive. They had a lot of star power. So, it's a big competitor in this space.